Welcome to this lecture on internal controls in the public sector and nonprofits. In this session, we'll explore how internal control systems are applied in government agencies and nonprofit organizations to promote accountability, transparency, and effective stewardship of public and donated resources. Public sector and nonprofit organizations operate under unique conditions. Unlike for-profit entities that focus on profitability, these organizations aim to achieve social, economic, or community objectives. This means their internal control systems must emphasize compliance, efficiency, and ethical responsibility in the use of funds. Let's begin by understanding the objectives of internal control in these sectors. 1. Safeguard public and donated funds. 2. Ensure compliance with laws, regulations, and grant requirements. 3. Promote operational efficiency and program effectiveness. 4. Prevent and detect fraud, waste, and abuse. 5. Maintain accurate and transparent financial reporting. In the public sector, internal controls are often guided by frameworks such as the COSO framework and the Committee of Sponsoring Organizations for the Treadway Commission, as well as government-specific models like the GAO Green Book in the United States. Nonprofits also rely on these frameworks to ensure accountability to donors, regulators, and beneficiaries. Let's break down how the 5 COSO components apply to public and nonprofit organizations. 1. The tone at the top is critical. Leaders must promote integrity, ethical values, and accountability. Codes of conduct, conflict of interest policies, and training programs help build a culture of transparency. For example, a city government may require annual ethics disclosures from employees and elected officials to prevent corruption. 2. Public and nonprofit organizations face risks such as grant mismanagement, procurement fraud, or noncompliance with donor restrictions. Risk assessments identify where these threats exist and evaluate their likelihood and impact. For instance, a nonprofit managing multiple grants must assess the risk of misallocating funds between programs. 3. Control activities are policies and procedures that mitigate identified risks. Segregation of duties in cash handling and procurement. Approval processes for expenditures and budget transfers. Documentation requirements for grant-related spending. Regular reconciliations of accounts and program budgets. In the public sector, procurement controls are particularly important. Competitive bidding, vendor vetting, and approval hierarchies ensure fair use of taxpayer money. For nonprofits, donation controls, such as tracking restricted versus unrestricted funds, protect donor intent. Timely and transparent reporting ensures accountability. Governments must disclose budgets, audit reports, and spending summaries to the public. Nonprofits must provide donors and regulators with accurate financial statements, impact reports, and disclosures. Effective communication channels within the organization also ensure that staff understand policies and compliance expectations. 5. Monitoring ensures that internal controls remain effective over time. Independent internal audit functions, external auditors, and oversight bodies, such as inspector general offices or audit committees, regularly evaluate performance. In nonprofits, periodic board reviews and compliance audits help ensure adherence to grant agreements and regulatory obligations. Let's consider a practical example. A nonprofit organization receives government funding to provide educational services. An internal audit reveals that some expenses were charged to the wrong grant account. The organization responds by implementing automated expense coding in its accounting system, providing training to staff, and establishing monthly reconciliations. These actions prevent recurrence and demonstrate strong accountability. In government agencies, similar scenarios occur. For instance, a municipality might implement a centralized purchasing system to ensure consistent procurement policies across departments, reducing the risk of fraud and misuse. Fraud prevention is a major focus in the public and nonprofit sectors. Common schemes include false invoicing, payroll manipulation, or misuse of grant funds. Strong controls such as background checks, approval hierarchies, and whistleblower hotlines help deter and detect such activities. Technology plays a growing role in strengthening public sector and nonprofit controls. Digital accounting systems, grant management platforms, and data analytics tools enable real-time tracking of spending and compliance. These systems enhance transparency and facilitate public reporting. Ethical leadership and governance are equally important. Boards of directors in nonprofits and elected officials in public agencies have fiduciary responsibilities to ensure that resources are used effectively and in line with mission goals. Regular performance audits and impact assessments reinforce this accountability. To summarize, internal controls in the public and nonprofit sectors protect assets, ensure compliance, and build public trust. They emphasize transparency, stewardship, and results-driven management. By integrating strong governance, clear communication, and modern technology, these organizations can deliver greater impact while maintaining accountability to their stakeholders. In our next lecture, we'll discuss emerging trends in internal control, exploring how innovation, digitization, and regulatory evolution are shaping the future of control systems worldwide. Thank you for joining me in this session on internal controls in the public sector and nonprofits.